So, money is intrinsic to the human civilization. Inflation is also intrinsic. And Bitcoin is the first engineered monetary system. And that means that a set of engineers got together more than a decade ago, and they decided they would redesign gold to make it perfect. If God came down from heaven above and designed the perfect money, it would be an immutable ledger shared with everybody in the world and correct, and no one could cheat on it. And that ledger would have what everybody owes everybody. And there'd be a certain amount of currency. It doesn't matter how many, let's say it's 21 million coins or 2.1 quadrillion Satoshis. You'd have a certain amount of currency. You wouldn't make any more. And whenever you owed somebody money, you would pay them and it would get updated in the ledger. And if no one could corrupt the ledger, and if everyone had a copy of the ledger and no one could cheat the ledger, and we could update that ledger instantaneously anywhere in the world, you would have perfect money. You can see gold coins are an imperfect, representation. Gold bars, really imperfect. You can't send a gold bar from Africa to Asia to purchase something. So we know gold doesn't work. And all these ledgers, all the fiat currencies are imperfect ledgers. The problem is they're not shared. They're not even correct. And someone keeps changing the amount of money. And so when I double the money supply, you lose half of everything that you have if you're saving in that currency. So Bitcoin is that solution. It happens that every 10 minutes we update the ledger. It's run by software that's incorruptible. It was designed, since nobody trusted anybody, the idea behind Bitcoin is everybody runs a copy of the software. There are thousands and thousands of nodes that all run the Bitcoin software, and they all update, and they all have the same version of the truth. So Bitcoin is the closest approximation to perfect money that we've come up with. And it solves a fundamental problem, which is how do 8 billion people on the planet trade with each other and trust each other? And how do they conserve their monetary energy over time and move it through space? And it's simply put the best way to do it. And that's why it's so significant. If you look at the US dollar, it's been inflating at least 10% a year for the last decade, from 2010 to 2020. And the S&P 500 index was moving up about 10% a year during that time frame. So if you were holding dollars, if you were holding $100 million, then, and you weren't invested in the S&P index, then you lost $10 million of gains every single year. Or another way to say it is the value of the cash decreased by about 10% a year. And that means over the course of 7 years, you cut your cash balance in half. The price of everything you want to buy is going up, but the inflation rate is not a scalar. It's not a single number. I can measure the inflation on consumer assets if I want, like what's it cost to rent an average house, and what's it cost to buy a Domino's pizza? What's it cost for Netflix? Or what's it cost for canned food or cereal? That's a number. That number is normally not going up as fast. I can measure a different rate, the rate at which really good houses in the Hamptons go up in price, luxury real estate, or an Ivy League education, or if I go to a doctor not in my healthcare system, but outside of my healthcare network, or a really good dentist that doesn't take my dental insurance, that inflation rate oftentimes is 15 or 20%. I can measure the inflation rate of assets, scarce desirable assets, like stock portfolio. That's 30%. I can measure the inflation rate of a bond, Well, a bond that yields $50,000 in interest a year used to cost $1 million when the interest rate was 5%. But when the interest rates got driven down to 1%, that $1 million bond now cost $5 million.
Wow.
So the cost of an annuity, or the cost of early retirement, if you will, went up by a factor of 5. That's hyperinflation. So inflation is really a question of, it's a function of the person and what they aspire to buy. And if your aspirations are to live in your basement of your parents' home and watch YouTube and travel around by Ubers and watch Netflix and eat Domino's pizza and manufactured food, then the inflation rate is low. If you actually remove from the index the highly volatile food and energy, when we create the PCE index, it removes food and energy. If you remove food and energy and you keep the other manufactured stuff, it's even lower. But if you put luxury goods and elite experiences and scarce things, if you put trophy assets or stocks or bonds or commercial real estate, that inflation rate is much higher, right? We can see that the Case-Shiller index is up 27% year over year. Producer price indexes for commodities are up 20, 30, 40%. Stock portfolios up 30%. So you see, if you aspire to stay wealthy or to be wealthy, your inflation rate is not the CPI or the PCE. Your inflation rate is probably more like the return on the S&P 500 index. And so that was 10% a year for a decade, and now it's 30% a year. And so if you wish to protect your family's well-being over a long time, then you're not going to be able to invest in assets that only go up 2% a year or 5% a year. That means that most bonds that yield 3% interest have a negative real yield. Negative 2% against the CPI or negative 3% against the CPI, but that's not really the problem. The problem is they're minus 27% against the S&P, right? So your index ought to be something more like that. If you're the CEO of a publicly traded company, you're expected to keep up with the S&P 500 index. So the inflation rate for a CEO of a public company would be the S&P index, which is 30%. So now, if you're Apple Computer and you have $100 billion in cash and you're generating 1% interest on it, and if the inflation rate's 30%, you're losing $29 billion a year in shareholder value every year. So you see, it becomes a much bigger issue for companies that have large cash positions on their balance sheet. I think Berkshire Hathaway has $150 billion of cash. So $150 billion of cash not invested in the market is a loss of 30% of that, or 37 billion dollars, right? Some large amount of money. And it'll continue year after year. And so that's why this is coming to the forefront right now. You could ignore it. You could ignore it if you thought the inflation rate was only 2%. But when you see all these assets going up much faster than 2%, you realize there's something else going on here. And once you embrace the idea that inflation is a vector, it's not a scalar. A vector meaning there's a different inflation rate for every product you want to buy in every jurisdiction where you might be, and it's changing all the time, right? The way you describe fluid dynamics or aerodynamics is vector calculus. You would never try to describe those things with arithmetic. You couldn't model. You can't model fluid flow around an airfoil with arithmetic. It doesn't work. So once you understand that inflation is a vector, then you start to realize that conventional remedies won't work. You can't save your money in a savings account. You can't hold simple bonds. You're going to have to find some other inflation hedge, and that leads you to look for scarce, desirable assets. And the scarcest, most desirable asset in the universe is Bitcoin, because Bitcoin is digital property. It is all the benefits of gold, all the benefits of property, all the benefits of money without inflation, without friction, indestructible, immortal, move at the speed of light, programmable, and everybody wants it on Earth. And you can send it to anybody on Earth.